All right, so yesterday I wanted us to understand structure because that's the foundation to everything we actually want to do. You want to follow the trend because I said yesterday that we are to trade the trend. You are to trade the trend. You don't want to trade the opposite of the trend, right? It's not going to do you anything than to waste your money, all right? So trading the trend is actually the focus. That's why the first thing to understand is the trend. So how do I look up on a chart and then understand the trend of the chart? And then that led me to talking about the principle of market structure. And then we talked about the bullish structure. I also talked about consolidation. This is a period where there's no significant difference between what's happening between the activities of the buyers and the sellers. And then I talked about the downward trend, which is as a result of more selling pressure in the market than buying activities, okay? And then we also talked about the fact that it is important to make sure you look at okay, there's something I didn't talk about yesterday and I wrote it down today. I need to talk about it. So there are two forms of trading. There are two forms of trading. Two. The first one is leverage trading, or which is also called futures. Some people also call it margin trading, which is essentially what we are doing anytime we talk about Forex. This is the form of trading whereby you don't own, you are not buying any of these assets. You are only trying to make money off an increase or decrease in their value. All right. So it's like basically you're predicting, oh, Euro JPY is going to go up, and then I'm staking this amount. If it goes up to this level, this will be my profit. If it goes against me, this will be my loss. All right. On the other hand, for people on the investing side, what they do is called spot trading. Basically, you are buying a particular asset or product or commodity or currency, and you're expecting the price to go up, and then you sell later for profit. That's spot trading. It's also very amazing. But the principles are the same. The technical principles are basically the same. So I do spot also for my cryptocurrencies, and then I'm sure some other people are already doing that. I actually recommend strongly, like make sure you have an unhealthy crypto portfolio. It will really help you. If it is stock, also make sure you have an healthy stock portfolio. If you understand the stock terrain, make sure because these are building blocks. They are not as risky as leverage trading, okay? So it is very, very important that you have an all-round knowledge and an all-round, portfolio. It will help you on your journey to creating wealth. Buy crypto, store them, keep them. Whether price is going up or not, whatever, just make sure you're buying and keeping. It will help you on the long run. So I felt I needed to really state that. Another thing I didn't talk about yesterday was the fact that there are trading sessions, right? These sessions, there are about 7 of them or 6. As a matter of fact, every country has their own stock market or stuff, but not every country's stock market is very, very important when it comes to Forex trading. And then the major important ones are the London session and then the New York session. All right. This is why this particular class, I'm actually putting it, so that we can trade the New York session. And I have my reasons. It's more volatile in that period. There's more volume in the market because the New York Stock Exchange is the largest stock exchange in the world. So every trading activity, all the largest hedge funds of the world who bring a lot of money into the market, they are trading at this particular time. So it just only makes sense to, trade alongside them. If you're trading the Asian session, for example, Asian session is like the third most volatile, session. But most times for people, especially if you're staying in Nigeria or you're, around the Nigerian time zone, it's always happening in the middle of the night. So personally, I'm not even a nocturnal person. I'm more active during the day. So I've always given more attention to trading during the daytime. So I think I dropped a short about that earlier today. Yes, because I feel it's very, very important we talk about this. Okay, good. It's very, very important that I really talk about this session. So you can see the local time in those countries. For example, the Sydney session, which is also the Australian session, it opens 7 a.m. in Australia. It closes by 4 p.m. There's really not so much volume in there. And that's like, if you're in Nigeria, that's like 10 p.m. in Nigeria. So that's why the Forex market actually opens Sunday night at, around 10 p.m. It opens Sunday night at 10 p.m. in Nigeria, okay? And then it begins to run. Usually for other countries, it runs just for 5 days in a week. So your trading Sydney session, that's the first session that opens, but there's really not so much volume in it, consistently. Sometimes they have excessive volume, but I don't really trade those sessions. They don't really make sense. The Tokyo session, which is also the Asian session, that runs till the midnight. So by the time you start checking up all this time, you would see how they all enter into each other. And then the London session, London opens at 8 a.m. in the UK actually. And currently, because of the daylight saving thing, you know that the UK and Nigeria were currently on the same time, right? So if you want to trade London session, for example, it's just easier. You wake up 8 a.m. or 9 a.m. There's quite some volume in there also, and then you could trade that. But the most interesting session to trade actually is the New York session, okay? So just because there's more volume in that session, it doesn't mean that the market won't still obey trend, it won't obey structure. It's still definitely going to obey structure, but there's more volume in the market at that time. So how do I make this example in a simple way? Maybe you go to a popular market, let's say Alaba International Market, you want to buy products, and then the main market actually opens between 8 a.m. and 4 p.m. And then all the other shops that are not inside Alaba, maybe some open 7, some close by 6. But you know that if you really want to get the best of prices, you want to get the best of things, you have to go when the main market is open. So that's the kind of picture I want to put in your mind, all right? And then it's quite interesting actually, because that's like the same time where you are up and ready to work. For us, in Nigeria, it's just very, very interesting. It's a very, very interesting time to trade. And then the market actually closes by, I think 5 p.m. in New York, right? So if you want to know what time it is in New York right now, you could just check up on Google, what time is it in New York right now? And then you look at wherever country you are right now. You can understand when to go in on the trade. I hope I'm clear on that, please. Oh, great. Thanks, Doc. Yeah. And then yesterday we took 2 trades actually in the course of the session. One of them is GBP NZD, and obviously we couldn't get to the profit level. All right. And then the trade actually struggled a lot within this range. You could see, I think we went in around here. Let me get this out. Okay, good. We went in around here. And then it took several. The market was just like fluctuating within a level for a very, very long period of time. And then if you go to the higher time frame, for example, you can obviously see the reason why. It's just a consolidation area, right? If you can look at this very well, this is a consolidation area. And the best thing to do for consolidation areas is to always, the best thing to do is to wait for it to break out, let the market break out of the level, and then it will show you the next direction it is going, and then you can start looking for opportunities in that regard. But of course, there's no harm in trying once you manage your risk, which was why I took the trade yesterday personally, and then was expecting that it should come down all the way. I was expecting about 45 pips thereabout, and then the stop loss was around 20 pips. I actually closed the trade around 18 pips loss, which was fine. The other one we took was a gold buy. It happened pretty fast before the sell, then continued over here on gold. We had about 60 to 65 pips, depends on how you took the trade and when you exited the trade. That's history. I took a trade earlier today. I wasn't really sure of it, so I couldn't share with everybody. It was Euro JPY. I took this buy earlier this morning. I had like 50 pips off it, and then still expecting, because there's a lot of uncertainty here and there. That was why I didn't want to share with everyone, so that people don't end up losing money or stuff. Well, let's go over to today's class. I'm going to talk about, all I want to talk about today is price action. I'm sure you might have heard about price action before, and then you're like, what the hell is this price action of a thing? Actually, it's very simple. It's just candlesticks. And then how they are formed. I'll tell you for a fact, like when you're just starting out, you would think there's one magic somewhere that is missing in your game, but at the end of the day, there's no magic. Like there's nothing else missing. This is the chart. All you will see on the chart is candlesticks. What else? How they are formed. It's as basic as that. And then how to then use their formation to make trade decisions or trade ideas. For example, always know that when you open up any chart, on your right side here, you will find the price. All these numbers, this is the price. And then at the bottom, which is is it the x-axis or y-axis? Just understand at the bottom, you will find the time. It's always time, the duration, that's what you find at the bottom. And on the right side, you find price. So you will discover that these candles are actually doing just one thing. They are telling you the location where price is currently at. The only business you have with candlesticks, the only information candlesticks are giving to you per time is to tell you about price. They just want to show you where price is right now, or who is dominating the market at every point in time. So there are always two forms. Depends on what kind of color you decide to choose on your chart. But on most people's chart, the red candle is always the bearish candle on most charts that you come across. However, you could decide, people just decide to change it to whatever color they like. Right? So, but on my chart, the blue candle is always, the bullish candle, and then the red candle is always the bearish candle. The blue candle or the bullish candle, they show you that in the duration that they are measuring, the time frame that this candlestick is talking about, it shows you that there was more buying activities than selling activities. More buying activities than selling activities in a bullish candle. On some charts, you find them to be, some people use black, some people use green. Just try to understand the concept of this candle so that whatever color you love or whatever color you find them, you can interpret what they are doing. If a candle is showing you an increase in price, definitely means that the candle would begin at the bottom and then close at the top, because price is going from where? From a lower point to a higher point. That's what bullish candles are showing. Price is going from a lower point to the higher point. So look at this, for example. You can Google this. I just Googled it up also. So you could see what this looks like here. Trying to like describe these candles. Look at this one. The opening point is at the base, and then the closing point is at the top. Let me mark it out. So just in case, you can see this opens at the bottom here and then closes at the top here. This candle simply tells you that what? In the duration, in whatever duration this candlestick is speaking for, Buyers took the price from the bottom and then they took it to the top. On the other hand, this candle, which is a red candle, shows you that what there is a sell-off. So price opens at the top and then closes at the bottom. Sellers successfully did one thing during the duration of that candle. They pushed the price from the top and all the way down. All right, they pushed the price from here all the way down. So this candle will close right here. This is the closing point. However, you can see this point of these candles. This shows you that what, even though this candle was a sell-off candle, but this was the highest point price got to in the duration this candlestick speaks about. This is the highest point for price on this particular candle. The same for this. This is the highest point that price got to in the duration that this candle speaks for. This is the lowest point that this candle, right, got to. And this is the lowest point also. So the only difference is the open and the closing areas. Try to understand. This region is called the body of the candle. All right, this is the body of the candle, all these places. And then this line you're seeing is called the wick. W-I-C-K, wick. Some people call it shadow, and that's fine also. But the most important thing, see, there are different types of candles. People, you know, who want to bamboozle you, they tell you this is armor, head and shoulder, doji, blah, 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 inversion, black shape. They are, you know, I don't bother myself with all those names. It doesn't really count. It doesn't really count. Those names don't count. All you need to understand is their functionality. The functionality of this candle. What's this candle saying? You look at the candle and then you understand what it's saying. That's the most important thing. It's not in the Japanese candle, dildo. I don't believe in all those, engulfing, all those stuff. The name, well, you may know the names. It doesn't matter also. You may not know it. It doesn't matter. The most important thing is your ability to interpret these candles and then understand their functionality. All right, so good. Look at this, for example. These are bullish candles, bullish candles, bullish candles. All right, bullish candles, bullish candles, bullish candles. Simply saying what? Price opened here, price closed here for this one. The highest point price got to, the lowest point price got to. But because this is a 30 minutes candle, it means that at the beginning of the 30 minutes this candle is speaking for, price opened here, price closed here. Look at this. If you're using, what's it called? Trading View, even on MetaTraders also have this candlestick timer. Look at this at the right where I just circled. It's showing you price. It's showing you that this candle is currently at 1.1910 whatever, and it's still moving, right? It's moving. It's showing you 2 minutes 42, 41. You know, there's a countdown timer right here. That's showing you that what the 30 minutes of this candle is counting down. There's a countdown. And at the end of the 30 minutes, the candle is going to, the last place price closes. That's where the upper part, or, you know, whatever the body is going to end up at. All right. That's where the body is going to end up at. This is the same thing when you open up on the weekly time frame. It's just basically the same thing. It is the same across board. Each candle here represents 1 week. Every candle you're seeing right here represents 1 week. 7 actual days, like the normal 1 week. But because the Forex market is actually open for 5 days in a week, so it's actually 5 trading days. Does that make sense? 5 trading days, Monday through to Friday. Sometimes there are public holidays in between, but understand that each of these candles represents 1 week, one entire week in real time. So when you've seen bullish candles, you've seen bearish candles, then how do we describe this kind of candles? How do we describe this kind of candles? Some of the oldies in the house, what do we call them? Good, doji, yeah, nice. Or we call them indecision candles. And there's a reason for that, You can call them indecision, you can call them, some people call them equality candles, some people call them indifferent candles. It simply shows you, when a candle comes off like this, it shows you that in the duration the candle is speaking for, there was a push between the buyers and the sellers, but the closing of the price ended almost equal. Like both the buyers and the sellers had an equal force in the market. So sometimes it's a show of lack of momentum. Buyers they drag, sellers they drag, but there's an equilibrium in price. That's why you have candles like that. They have the wick at the top and at the bottom, and then price is actually, the body is actually very, very small, like this, something like this. All right. They have a wick at the top, wick at the bottom, and then price is just closing somewhere in between. We call them doji candles or indecision candles, and some people call them indifferent candles, like whatever it is. So let me go over to a 30-minute chart, still on Euro USD. And then let me spot out some of these candles, and then we begin to see how relevant they are. Look at this, for example. This is a typical indecision candle, right? This is one also. Oh, this is a very good example. Look at this. Price pushed up, price pushed down. There's a long wick. By the end of the day, look at where the body closed. The body closed, but you can't really see a significant difference between whether buyers are in charge. Or, of course, in that, because it ended red in color, there were more selling activities, but it's just basically like an indecision candle. It shows you there's indecision in the market. Now, let me try to spot more indecision candles. I'll tell you where they're important in a minute. Okay, good. This is another very good example. Look at this. Even this is an indecision candle. If you played around enough, you will know. All right. Once you find a candle was a wick at the top, wick at the bottom, almost an equal level of wick at the top and at the bottom, and then the body is just there. You know that this is an indecision candle. But most times it's just easier to spot them when they are like this. Look at this. Look at this. They show you exhaustion in the market. You can play around with them also and try to spot them. Now, when people start identifying candles, another mistake some people begin to make is to think you want to make a decision in the market just because of one candle. It won't really make any sense. Let me show you something. I'm going back to the knowledge of structure. On this downtrending trend right now, obviously you can see from here to like here, the market was trending down. What candles are more predominant? Like what candles can you readily see? Anybody? I'm waiting. Good. Good. I'm waiting. More of the new guys. I want to know. Okay, good. So you would figure that these candles, when they begin to form, a collection of these candles would be what will show you the trend of the market. All right. So the trend in the market, the structure of the market is actually being shown to you by one candlestick at a time. With every candle that keeps closing, you can readily begin to say, oh, nice. This is what's happening in the market. So people sometimes, the mistake new traders try to make, or even existing traders try to make sometimes, is to begin to think, oh, it has gone down enough. Now it should start going back up. You are not the one to make that decision, right? Because you don't have that capacity. You can't tell. All right. It is the market to show you that yes, I'm changing, I'm switching momentum, I'm switching trend. If you don't see that, that switch in trend, like I showed from yesterday's chart, just understand that the market is doing what it's doing. It might be selling, it might be buying. Yours is just to flow alongside with it. Let's look at this market, for example. Let's look at what's happening currently. All right. So from here, let me mark it out so you see the trend. See the trend, guys? Pay attention, please. All right. The downtrend obviously didn't continue because from here, we're expecting that what price shouldn't break above this level. And then that's where you begin to pay attention to say, okay, what's happening? This is where you begin to pay attention because we're coming from a downtrend, for example, and then we're having predominantly red candles. The red candles were so strong. They were coming in strong. But here now, look at the blue candles that are forming now. Can you see how strong they are? And what has happened? This candle readily has pushed above this structure. It has come to show you that what is like buyers are now ready. Never forget, there's something I also didn't talk about yesterday. For example, as we're looking at Euro USD right now. When Euro USD is buying, it means that buyers are more biased for what? Euro. It means the price of Euro is what? Going up. When Euro USD is buying. So when you're on any chart and then there's a buy, it means the currency on the left or the commodity on the left is strong. People have more faith in the commodity on the left at that time. That's why it's what? Going up in price. Once there's a sell, it means that what? People have a bias for the currency. For the currency on the right. So it means that when it was selling, basically there was more strength for what? For USD. But now, look at these candles that just formed. I'm going back to that subject of the candlestick now. You can see how strong compared to, you've not seen, any significant, bullish candle like this in quite a while. It started from here, you could start paying attention, and then we saw eventually this one broke the existing structure. And it looks like this one came to retest it, but we are still going to wait for, because it would show you over time if it's the beginning of a new trend. There will still be new buying opportunities. You don't jump in here. All right. This is not the kind of places to jump in. Where to jump in is what I will be talking about in a moment from now, which is where we talk about support and resistance. I laid a little foundation yesterday over there, but I will still put more emphasis today. And then you will see how you can use several candles forming at a location to make trade decisions. So now looking at these candles and how they are breaking up to the upside, it already shows you that what there is strength now for the buys. Euro is picking up, and it's picking up really, really hard. If you have missed the entry, what do? You wait, you start anticipating the next opportunity to go in. I want somebody who can unmute, if you can unmute yourself, I want to hear somebody's opinion. Where do you think you can start making a buy opportunity? Like you can start taking a trade here. If we want to trade Euro USD now, when do we wait for? I'd love to hear from somebody.
At the retest of the resistance that was broken.
Good. Thank you very much. So we would anticipate, because why? Don't forget, we are expecting the creation of structure. Now it will look like this. Price must come back to retest this level. It may happen today, it may not be today, it may be in a few days, and then we continue the zigzag all over again to decide if the market wants to continue in that direction. Okay. On the other hand, if you have traded this on a very lower time frame, you might have been able to spot the opportunity earlier. But I'm speaking for this chart we're looking at right now. If you're waiting patiently on this, what would you do? You must wait. I know people who try to think, oh, you want to jump in now. It's already getting late. All right. You buy from what? Support. Don't forget. You sell from where? From resistance level. And I'll show that also in a minute. Let's look for another chart so I can show the principle of you selling off from a resistance point or something. Let me come here. Okay, good. So I want you to pay attention to this area right now. We already understand, okay, we all saw what happened. I just cleared it so we could use it for an explanation purpose. This is what it can happen on any time frame, okay? On any time frame. You want to see, how do I spot, okay, am I ready to go in on a sell in a market? Is it just by one bearish or bullish candle that I will make a trade decision? Or I'll need to look at over and over how the candles around the area just behave before I go ahead to make up my mind. Good. Look at when you find, like when you already anticipate a level, because if you were trading this, obviously you want to anticipate this level for price. All right. You want to anticipate this level for price. And then when you start seeing a candle, there's a candle you will find, a kind of candle you will find at almost every important support and resistance point. It is this candle. You will find it on every time frame. You will find it on most time frames. Let me put it that way. These are the candles that begin to show you that it seems there's a reversal in price that is about to happen. Let's watch this play through and I'll explain it, because it happens in 2 dimensions. So you don't get to mix it all up. Look at the one that followed that particular one. Also a bearish candle. Candles are important. I want you to note this. They are very, very, very important, especially from support and resistance level. You don't just pick a candle in the middle and start looking for what importance it has to tell you. Look at this level. can you see the candle that formed right above this support level? All right, can you see the candles that formed right above this support level? This is a rejection candle. This is an indecision candle, the first one. This is a good rejection candle. All right, and then the next one that followed also is a rejection candle. But this, look at this candle coming over, like trying to like show you that sellers are back in town, right? With this kind of situation, let's just see how it eventually played out. And then another candle to show you sellers are in charge, but then buyers came over to chart. If you are taking a trade here, which anybody could have done, I could have taken a sell trade, maybe based off these buyers, for example. This is why we set stop loss, because you are not the one who is going to move price. Yours is to have an expectation, and then you manage your risk alongside your expectation. Because if I had taken a sell here, for example, and you don't set a stop loss, honestly, you would waste your money. Your account will get blown. Because if you are trying to take a trade from one resistance level, maybe for example, from this resistance level, you wanted to sell to the next support level, which will be here. If you are anticipating a take profit level, you must also know where your trade becomes invalid. It is very, very important. You must know what invalidates your trade. Let's see how this just plays out to the very end. And I'll look for one or two more examples. Obviously, you need to always understand this is now the new level or the new area. The body of the candles are way more important than the wicks. And then you could see how price has reacted again at this level. Look at the kind of candle it gave. It gave us this proper rejection candle. Can you see this rejection candle? The kind of candle I was talking about. It gave us this rejection candle again at an important level, right? At a resistance level, we had this rejection again. What followed? Sales followed. Let's look at what happens again at the support level, because we now need to identify this is now okay. I'll take this area now as the new support level. Good. Look at how this candle closed off that level. These two candles, apparently they closed bullish, right? Showing you that there's a likelihood of price going up again. But obviously, if you are taking a buy without setting a stop loss, it wouldn't have really ended well. This is why risk management would be the next thing I would like to talk about, and that will be tomorrow anyway. But I still will do more candlestick examples, and I would like to take your questions. If you have questions, so basically you could also like go back on any chart of your choice and play around, look at how these candlesticks are formed, then try to identify their formation at the key areas. The key areas are the areas we refer to as your support and resistance areas. How do you even find or identify these levels? One easy way to find out your support and resistance level is not by one candle. Majorly, you find like two or more candles at that level, always coming back to hit the level, and then there is always a rejection. Look at this. Rejection, rejection, rejection. This is still considered as a bullish candle. I'll explain it to you in a minute. This particular candle, when you find it off a support level, it's a bullish confirmation. All right, though it's a weak one. This kind of candles, when you find them at support level, it's a bullish one. When you find the reverse of it at the resistance level, it's a bearish confirmation. Okay, but if you find them at support, like turn the other way around, it's an indication to buy. I just hope I'm not confused you. Look at this area, for example. You can see all the wicks being rejected. Look at this, the wicks being rejected. It shows you that price was trying to go up, but it was sent back down. Like there's a push back down for price at those levels. Very, very important, price action to note. And then you can always readjust based on the time frame you're looking at, because the level will differ a lot. Will every rejection candle lead to a rejection? No. Will every buy candle lead to buys in the market? The answer is also no. But most of the time, right, they would constantly like show you the direction of the market. And then you can use them to make trade decisions, okay? So let me go ahead and okay, let's mark this chart out so we can start anticipating the next opportunity to make some buy entries into it. Because it's obvious now that buyers are, like more dominant in this market at the moment. Price just broke off this consolidation area. So you can see here we have like 3 candles at this point. That's how I'm able to know where to put all these lines. I'm not just putting them randomly. You are putting them at areas of importance. Like you can see how this space is important to this trade. You can see all the rejection levels here, but eventually, even this is not a clear bullish. These are not bullish candles yet. All right, they are not really very strong bullish price action yet. All right, this is where maybe confluence or trying to add other things or looking at other time frames would be important. Okay, good. H4 looks like it's forming a strong bullish bias, but we stick to what we're doing on H1. All right. You don't want to jump into this. You don't take trades in between. All right. If you want to take your buy entries, what do? Wait for that pullback. You must wait for the pullback. The pullback might come to be around this level because price needs to come back for a retest. Oops. We need to see that retest. We need to see that retest. Because price won't just break off and continue to go like bra, 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 bra. It doesn't happen. So we'll see the full story here. If this is the lowest point, all right, and then price has done this, we need price to come back and retest. This level must be retested. This area needs to be retested before you can say you want to take a new buy entry. Okay, that's the way I would be doing it. We need to wait. This area must be retested. It's very, very important for this trade. And then because, okay, I think let me leave that for now. Who's got any question I want to ask? Just let me take some questions. I think it would be important to know if you really understood what I shared. You can unmute yourself and please ask your question.
Yeah, actually, sir, I'm still having issue on placing the support and resistance lines that you are placing. So
Okay.
I really don't get that clear.
Okay, let me note that down. Who else has another question? I'll explain support and resistance now. Any other question or contribution?
Boss, well done, sir.
Yeah, Chief, what's up?
My question is, when will Bitcoin hit $1 million?
Get out. He's out.
Well done, bro. Well done.
Yeah.
Great one.
All right. Okay, so quick one. For the person who asked on support and resistance level, I like to use higher time frames to explain the concept so you can start bringing it down to whatever level by yourself. I'll still use the same GBP JPY, I mean GBP NZD. I'll use a weekly chart for an example so you can understand what I mean by support and resistance level. On every chart that you find, there is not only one support or one resistance. There are always different support and resistance points. Your support points are the places where price would get to and price will begin to go up. Price gets to the point and price from there begins to go up. What it simply means is that these are areas that price would get to, and then there's a lot of buyers activities from there. That is, when price is at a support, buyers think it is now very cheap enough for me to buy. For example, when the price of Bitcoin got to 30,000 from 68,000, a lot of people, investors, had a bias that, wow, this thing has gone down by about 60% or thereabout. It is a good opportunity for me to put my money in, and they kept buying. And that has done what to price? Pushed price back to around 47 thereabout now. Would you begin to look at that and say, okay, what am I doing as a person? How do I identify my support point at every time when I'm trading? Another simple definition you could have for support is the area where we call it the floor for price, the floor for price. And then you are using the most previous one, the one before, like if I want to know what my support is on this trade, on this particular chart I'm looking at right now, this is where price is currently. Price is here right now. And I want to know what support points should I be expecting price. I will use the previously formed support level, which is this point. What's the last resistance point that was formed on this chart right now? It is this point. The resistance point is the place where price gets to and price begins to go down. It means that people who bought at the support feel that what, I've made enough money at the resistance, let me sell off. When people buy from the support, they want to sell at an high point, and they feel I've made enough profit at this point, I'm selling. So when people sell, what happens to price? Price will go back to where? The support level. It's as basic as what? Let's say you run a shop, you run a business, or you're buying and selling, which is what everybody's doing actually. We're all buying at support and selling at resistance, but people don't look at it that way. You come to the guy who is selling this shirt, maybe he would go to Polo and then he will buy them in quite a good quantity, and then he will get some discount in terms of price. He is going to resell out there, and of course, he will add some money to it. But maybe because of one situation or the other, Polo runs out of stock, and then they don't have this particular shirt anymore. The person who has bought can decide to say, okay, let me just jack up my price. It's an opportunity for me to make some money. But upon hearing that, now Polo has made, now they have excess amount of it in store. They will be releasing it to the market very, very soon. If the person is wise, what are you trying to do? You want to quickly sell off what you have, all right? Because obviously when Polo releases new brands or new whatever, it will reduce the price of the ones that have been in existence for quite a time. That's just a very, very simple way I can try to put it. So see support as that point where when you buy, you will make money in the future. Resistance, on the other hand, as that point where if I sell here, I've made good profit. Or if I sell here, I can sell to the next support level. I don't know if you got that point, right? But I think I've tried to bring it to the simplest form I can get it to. So how do you find your support and resistance level to be important? Price must respect the place a couple of times. Price must respect the place a good time over and over. Look at this place, for example. Can you see what happened here? See how price got to this place severally before going back down to this level. And why would this happen? Obviously, this is a resistance point, right? Because more people were not willing to buy the market at this price. People feel, since this price is high, excuse me. So definitely, once the price is too high or considered to be high enough, a sellout will follow. Excuse me. All right, so a sell-off is definitely going to follow. For another style to still describe the same principle, I can make these lines, because this is where you need to still pay a little more attention. Pay a little more attention here, guys, because support levels are not permanent level. It doesn't mean that it can be broken. So pay attention here, please. Because when a support level fails, it becomes a resistance point. When a resistance level fails, it becomes a support point. On and on like that. The market is fluid, like I explained yesterday. The market continues. It's a moving train. The market is a moving train. Buyers and sellers, we all continue to determine what's happening all right, we all continue to determine where the price is heading to. So for example, if price does this, moves up, comes back to retest this level, and then does this, don't forget, this is what? A resistance level. But immediately price breaks that resistance level will become what? A support level. Now price is going again to the next resistance level. Let's say price was rejected at this resistance level. Where is price definitely going to come to? It will come to this support level. And if this support level gets broken, price must still come back to retest it to confirm that it's been broken. And then this has become what? A resistance level. If you understand what I just explained, type 1. If you don't understand it, type 2. If you think you need a little more time to understand it, type 1.5. Okay, I'll run it through again. I know you guys get it now, and I'm glad. For those who won't get it on the first time, please don't be hard on yourself. You might need to go. That's why I'm recording this video. Sit with it, watch it. If you find yourself bored watching videos like this, you can watch it at 1.5x. Make it faster a little bit, but you just have to watch it, and then continue to play with the chart also. So for an example, if price is coming all the way from here, price is coming all the way from the top, and then price comes back to this place. Don't forget, this is your what? It means this is your resistance point. And then if price rejects at that resistance point and push all the way down, right, it's definitely coming back to the next what? Your support line. If that support line gets broken, once it's being retested, this place now becomes what? Your resistance, and price breaks. Price is coming to where the next support level. If this happens, that price pushes back, definitely you have your resistance point here. And if price breaks above that resistance, what happens? The resistance point becomes your new support level, and on like that. This is what will lead me to description of patterns, right? I know I'm going to talk about patterns, but that will be maybe on Thursdays when we talk about patterns. Tomorrow, I won't go on to talk about risk management. Yeah, we could put patterns in between also, so that you can begin to see how everything is just intertwined together. I don't teach indicators because I don't use indicators. I look at naked charts and then make decisions with them. I don't believe in bots. I don't teach anything in that regard also. So this is the simple strategy that I have used over the years. And this is what I've been teaching also. And I'm glad, there are tons of people in the group also who are making, amazing money for themselves using the same principle. So yeah, in a bit not to clog you with information, I think this is what I would be teaching for today. Let's just go out there on the chart and try to spot buying or selling opportunities. Is that okay? Any questions in the house or contribution? It's the same principle down to whatever time frame. Okay, good. Look at GBP/NZD, for example, and trace it back. Can you see what price is doing? Now, look at where the body of these candles closed, all right? Look at these bodies. Without forcing anything, I won't even look at, drag it up to the other end to go see. I just want to put an horizontal line on the body of these candles, these two candles right now. You know, this is a rejection candle, obviously. This is a rejection candle. This 30 minutes close is a rejection candle. So I'm going to put an horizontal line here. And then I want to see, I'll go down to the left to go see why the price reject at this level. Why the price reject at this level. That's what I want to go and see. And obviously, it will make a little sense here. Can you see how price has reacted to that area before? You can even just, for ease and convenience, because always understand, in reality, it won't be an exact straight line. It is you who will just try to adjust it and look at what has happened in that area. So look at this place, for example. Can you see this area? And then the new area where price got rejected also. But you don't want to take a sell, do you? You don't want to take a sell of this, because the major trend is what we want to catch. This is just going to lead us to our next kind of action that we are preparing to take, okay? So for me to take a trade-off here, I would expect, I'll do this. If price pushes back to this level and then gives me a bullish price action, I begin to see reversals at that place. I see wicks being rejected. I see like 1, 2, and then I see a good bullish pattern, because these bullish candles are really, really pretty strong. We've seen them on the higher time frames, right? Was it this? Okay, I think it was Euro USD we saw on H1 time frame. Oh, it was Euro USD. It was Euro USD. It was Euro USD. But even for this GBP NZD, I'm not going to sell now. I just want to wait, get that bullish price action before taking a trade in that order. The same expectation I would have for this. There must be a sell back to this resistance. I mean, yeah, to this support level rather. This area that got broken, and then we look out for trade opportunities from here, and then good. Yeah, support and resistance is the same thing as demand and supply. Why we use demand and supply is because it's more encompassing. Like it takes for example, let me pull up a demand and supply rectangle on this. While support and resistance, we're trying to mark out just one line. With demand and supply, we're trying to mark out the entire weak area. Can you see this? So instead of me just putting one line here, for example, I'll just mark this, and then you can adjust it. It's actually very, very important to see the market in this light. Can you see? So with this now, I've trapped, see, can you see? I've added like the week of this, the week of this, the week of this, you know, all the weak area. So when you're drawing your demand and supply level, just make sure that
Can you repeat again? There's a support around 1.903. Is it not valid? It looks very valid to me.
what's that?
Well, we use the 1 hour time frame, and you
There's noise over there. I can't really hear you. So when you're using the demand and supply, you just need to like have a broader understanding that you are trying to measure more areas, like you're trying to measure areas, you know, like this is how they're used. Okay, you're talking about GBP NZD, a valid support at 1.903. Let's check, let's see. 1.903. Okay, so yeah, sure. I think
Use the 1 hour, please.
1 hour. You want to take this as a support? I wouldn't. This, right?
Yeah, look to the left a little bit more.
Oh, no.
You see?
Yeah.
Yeah.
Yeah. Quite valid area. It's a valid area. It's a valid area. Nice. Thanks for spotting that up. So yeah, guys, let me stop recording so we can just chill and then it's not too lengthy for the other guys to watch.